Hello and Happy New Year. I am delighted to open up the Conversation and Insights series for 2025 with a special guest, a FinTech veteran, Spiros Margaris. Delighted to have him with us, and let's dive in an unconventional way.
It doesn't matter, but that's part of it. It makes it real. So, we all had these visions, all of us, and because we all learn from each other. I learned from you, from Brad, from Jay, whatever, from a lot of smart people, Theodora. But things happen very fast. And it's nice because fintech has been embraced through the fintech supermarket, etc., by much broader market participants, from financial industry to non-financial industries, the embedded finance trend. And with AI, we see even a second wave of possibilities happening. We will discuss this later, but I think fintech got a new life through AI.
Yeah, let's start really discussing a bit your public investments and the public sector of fintech, which has grown, whether we look at it from a market cap perspective, companies starting from Nubank in the neobank sector, but other companies like Square, like Aiden, we have so many public companies, and they're also employing a lot of people. So the sector is huge, no matter how you look at it. You're an advisor to one of these actively managed certificates that focus on fintech.
Yes, absolutely. It has even my name on it.
Yeah.
And we've done quite well, over 50% return, and even in these difficult times. And the public sector, the publicly listed stocks are very interesting because it's like where the private want to go, they're already there. It's a transparency, even more professionalism. Because, of course, the difference between public and private is, in the public sector, you name it, from a new bank to American Express, MasterCard, you name it, they're accounted for quarterly, and they're very transparent. For privately owned companies like Klarna, for instance, which likely will go IPO this year, there's limited amount of information you have. So the privately held companies are more accountable to their investors, and both. But the publicly held companies give you a little bit the feeling where a much closer feeling where things are happening, in terms of professionalism. It's like the difference between, I call it like basketball. There's this college basketball and the professional basketball. And the college basketball are all the private companies. They're great players, potentially going into professional basketball. That means they go IPO, and they join the other companies, the MasterCards of this world. But there are two different worlds. But I think it's beneficial. I'm probably one of the few people who is in both spaces. I have my name on investments in private companies as well as my funds in AI, and you learn from each side.
Yeah. Yeah, I like to think of that like a barbell, where on the one end we have a lot of focus on risk management, compliance, focus on shareholders, and on the other extreme, go fast, break things, innovate, experiment, look at growth. You're not really focused on your investors and the public eye. It's kind of the two extremes.
Yes, but eventually they want to go where the public is, eventually. But and let's not forget, all of those companies, and MasterCard, AMCs, everyone was a private company at one point. Not everyone, but a lot of them. Not all of those companies, but a lot of them were. They started.
But Spiro, you will agree that that with fintech,
Yes.
because of this last decade, most of these grown-up companies have stayed private much longer than, companies stayed private 20 and 30 years ago. And that's not only in fintech, right? It has to do with the structure of the market. So in a way, I'm a bit disappointed with the fact that these grown-up fintechs,
Yes.
Klarnas of the world,
Tribe.
are not voluntarily behaving like a public company. I would have expected that they would adopt the transparency, the mindset, and the culture ahead of time, like maybe 2 years ahead of time, without having it sort of being imposed to them. Why do you think that is happening?
I can assume, it has to do with expenses. It has to do with restrictions. I think it's much tougher if you, in the public in general, and I think they take advantage. They have some disadvantages. I mean, you don't have the same liquidity as you have in the public market because of the stock market. And that's one advantage that try to take advantage of, not to have to report, to the public and disclose good times. I mean, good things they always disclose because it's like pitching for the IPO, etc. I mean, that's easy. But sometimes, I believe to be private is also has advantages. Look at companies like privately held companies. They have maybe a long-term view with their strategy. I mean, that's a disadvantage. You have the money in the stock market, but you can't actually execute sometimes a strategy easily with a long-term view. I don't think Amazon would have existed nowadays with all the losses they accumulated. I mean, we know over the years
Yep.
and with the success they have now. But I think there are times where investors are much more, how shall I say, tolerant to losses that lead to a successful business model. And I think the startups that didn't go IPO probably were afraid that this tolerance would not have been accepted, that they're not successful enough. I think they want to wait to go IPO until the bride is beautiful enough, to get married to this
Yeah.
public market.
What are your thoughts, Spiro? I mean, the democratization of investing that we've seen through fintech, we've seen a lot of that, right? Whether we like it or not, Robin Hoods and the robot advisors and so on. But with respect to private markets, opening up accessibility, we've seen some, right?
Secondary markets.
Secondary markets, we've seen some that are offering lower minimums to private investments,
Yes.
be it hedge funds, be it these types of investments, but nothing really that has moved the needle. And your opinion, please, on this. I don't think that fintech has overall increased the average or allocation to private markets that people, when we think of a 60-40 portfolio, how much is alternative private markets? Maybe
Mhm. I
0,
haven't,
5%, 10%. Has it changed it?
I haven't seen it either. I haven't seen it.
Yeah,
It was not a priority, I guess. And I guess they also the bigger they get, they rather have fewer investors if they can. And
yeah,
with few investors, probably go back to it keeps everything a little more private. If the more small investors you get, even in a private market, the more you become indirectly public because you have to disclose more things, and things can leak, bad things in every company. It's like you go into a kitchen in a restaurant, you will see sometimes things that are not so good. But if you go in every kitchen, probably it's the same.
yeah.
So I think there's no interest to open up to more small investors. They probably want the fewer investors, the better. I mean, you also have seen with OpenAI, they didn't invite that many investors in, and there was no interest to invite the, they could have said like Monzo did. Remember Monzo at
Yeah.
the beginning? There would have been a great investment where they allowed a lot of their customers to participate,
Yes. Yes. Yes.
shareholders.
Yes.
But I haven't seen this afterwards, really.
Yes. That's a great example.
And
We saw
Monzo was a great
you.
story. I
Yes.
think it would have been loved to be part of. But at that time, fintech was so new. I mean, there was risk. It's like you invested in Bitcoin at $4 or $50. It's easy to say it's a great investment now.
Of
But
course.
at the time, I think people invest in Bitcoin, for instance. I mean, I don't proclaim Bitcoin has its future anyway, and I think especially with this government, with Trump. But I think people invest in Bitcoin at that time not because to make money, early, a lot of them. It's just because they thought it was cool. It was cool.
Yeah, and it was a certain type of people that were more passionate about decentralization, more
Yeah.
passionate, there's other aspects of it. The same as you said with digital banking, early investors might have also had, I would say it's like taking a stance with your money, right? Putting your money and taking a stance,
Good
right?
point.
And you never know, there might be 100 monsters coming along and who will win. The same with Bitcoin. There were 10 or 20 hard forks. Who knew that none of them would
Yeah.
succeed, right?
And
Nobody.
at that time, I remember with each fork, you were kind of nervous on which
Exactly.
what to bet. It's clear now in retrospect, but
Yes,
at the moment, if you're in the space, nothing was clear. At least,
exactly.
at
Uh,
least not for me, but in a lot of people. So it rewarded the risk takers and the people who stuck with it.
So in 2025, Spiro, if one is a fintech investor
Yes.
and wants to think of the allocation between private and public markets, how would you help that person think through this? Is there some numbers? Is there a rule of thumb, a 60-40 that applies to public versus private or to fintech? Is it more thematic? Should we think thematic and say, okay, these are the 5 themes, I want to invest in these, and then go and see where the opportunities are? Are they, in the public markets, we have more payment companies, we have less blockchain companies. Any thoughts around that?
I mean, the easiest way for people involved in fintech is obviously the public market, and
Yeah.
the ETFs or direct investments. I mean, from Visa to Master, Mercado Libre, I'm not recommending anything now, but I think that's the easiest way. And I think it's much more risky to invest in private markets. And I think the liquidity is not there, and the company can be unicorn and be worthless at the end, or it can go up for 1 billion, but depending on which level you are as an investor, might not get anything. So basically, I don't have a rule. It just happened that I come from the hedge fund industry. I've been investing in the private market primarily and had the opportunity to launch my funds, the AI and FinTech fund. But I would not per se recommend. I mean, I don't have a rule for this.
Okay.
It evolved with, it's like your career, like life. It evolves, with opportunities that come across.
Yes.
But I think if people, I believe fintech will benefit in 2025 a lot with this government and with government in place and AI as well. So I would rather tell people to find a good fund or invest directly into stocks and not, unless they have the capital and the connections to diversify with investing in startups. But people are passionate about startups, and I think, I don't say don't do it, but it's just two different animals, you
Yeah.
know
It's
like driving a tractor, a big, or driving some Formula One car. I'm not saying which one is which, it's just two different cars, two different races,
Yeah. Yeah.
with more powerful themes. And I would just diversify with each industry because we're usually surprised which part of your portfolio performs. We believe everyone will perform, but at the end of the day, we're surprised with which part of the portfolio basically brings the performance.
Yeah.
So to take this out, diversification is key.
Diversification. This is a timeless principle, I guess, that we never forget. A Bitcoin maximalist or a neobank maximalist or whatever maximalist we are, because we never know what will happen.
And once you're successful with something, it's easy to start believing in yourself and say, "Oh yes, I was so smart, and that's why I chose this." But we also chose some stocks or some portfolio as some companies that didn't perform. So basically, I think the average of our smartness is the key. It's not the specific,
Yeah,
I
I
believe,
agree.
and also
So,
the
so
long term.
in your case, how have you been practicing that? I know that you have the FinTech AMC, you have the AI
AMC, yes.
AMC that also got an award, a Swiss
Yeah.
award in 2024, and then you have your venture funds.
Which I'm a partner, like SparkLabs in Saudi Arabia, which we invest in AI startups,
Okay.
private, and
Is
sponsor.
there a regional focus or not really?
In that case, it has some region. I mean, the startups can work from anywhere and have markets from the US, etc. But obviously, they have to also have preferably a base in Saudi,
Yeah,
to support the local economy, and from hiring people and also trying to explore partnerships in Saudi.
yeah. Interesting.
And Saudi Arabia, I mean, is a country that I think it's been for a while, a country that the bets puts their, as you say,
Yeah.
they they bet on AI, on technology, because they see the future in new companies and new technologies, and not only in Saudi but worldwide. I mean, the investors all over the place, I mean, all over. I mean, a lot of
Yeah.
private companies and globally plus public.
Yeah.
But they just all country. I mean, Saudi is very good at it, and also a long-term view, in my view. But governments in per se, look at the UK, the focus on AI is huge, bring it into school, bring it everywhere. I think people start realizing that there's something, even if it's not perfect, the solutions, it's becoming more perfect as we go along.
Yeah, it's one of the aspects that makes it a general purpose technology, that it is evolving fast, that you can combine it with all these other technologies. And I don't think that still we grasp what can be created. There's a lot of to be
Oh,
discovered, right?
when I give a presentation lately, I use the first slide, the AOL login. People don't remember it, like 20 years ago, a little bit more, and it was like so slow. And
Yes, yes.
after 20
Remember
seconds,
the sound effect?
exactly. At that time, I tell everyone, I do usually slick presentation, and I start with this rough, old-fashioned slide video. And I said, at that time, we all thought that was cutting edge. Whatever we see now, it will feel in 5 years like the AOL I'm showing you now.
Yeah.
A lot of things, we believe, oh my God, that's it, but it's
It's
nothing.
a great example. I'm seeing, the past week on LinkedIn, a lot of videos about some advanced POS machines, POS
Yes,
machines, right? And as you said, probably, I don't know, maybe in 5 years already, these will be like the cassettes that
yes,
we had when we were growing up, right? And we used to wind
And we have to remind ourselves of that. I remind myself of this because it's like, we can't basically, even us, which basically daily we discuss, exchange ideas about technology, where fintech is going, where AI is going. Things are moving so fast
So
that
fun.
basically, it's like mind blowing.
Spiro, can you share with us anything that is more, center on your radar screen in terms of the potential innovations in fintech coming from AI or whatever you're seeing? Are there any subsectors that you're more excited about? Like, let's say, are you more excited about AI in capital markets versus
Ah,
AI in payments? Are you more focused on really infrastructure stuff that can be used cross industry? Where is your, I don't know, your heart maybe, or
oh,
what's
I,
attracting you? Is
I,
it hardware? Is it software?
ah,
Is it capital markets? Is it
I see where your heart beats. Capital markets. No,
I want to hear capital markets
I
from
know,
you.
I know, I know, I know.
You
Since
get it, right?
you're such an expert in that, and there's such a history. I think it's a little bit like fintech at the beginning.
Okay.
So what we're catching now is the low-hanging fruits. At the
Okay.
beginning, a fintech, to make it very quickly, fintechs did very simple things, faster onboarding, and then that basically big banks should have done, but they didn't do it, whatever. There was no need to. Now big banks caught up. It's like there's almost no difference anymore in terms of offering, but not in terms of innovation speed. And what fintech did, they picked up the low-hanging fruits,
Mhm.
simple things, which in retrospect, they're simple, but at that point it was not simple. Like when
Yep.
for instance, number 26 brought its debit card, nicely designed, little great user experience. Professionals laughed about it at the beginning because I thought, oh, it's just a debit card. But there
Yep.
was a whole mindset behind it, or Monzo with his colorful card, etc., or Wise, TransferWise before, which they run almost naked with the skin-colored bathing suits through London to say we're transparent. You know
Yep.
the fees. So basically, here we are now too. Klarna probably is the best example to look at, and people should look it up, where you see where we're heading. It's like, what do we do? Marketing costs go down. The pictures they use, the design with AI, customer support, AI again, the chatbots. So basically, I don't think we see anything at the moment yet beyond simple things, designing
Okay.
pictures.
So it's the low hanging fruit you're saying.
Yes.
And
At the
also what
moment, at the
at the
moment.
moment, yeah, in this stage. And it's also a bit commoditizing, reducing costs of
Yes,
certain
very good.
workflows and
And
processes
also people. I
and
mean,
people.
that's
Yes.
where, if people don't believe that AI will cut jobs, it does. Because, I mean, if you look at the tech giants, they already cut a lot of their workforce because Amazon was just saying, I think, or Meta, Zuckerberg was saying, soon the middle coder, I mean, middle level coder will be replaced through AI, you know. So I think it's cost savings, bringing out efficiencies. We haven't seen yet, but it will happen.
Yeah.
Some
Yeah.
use case where you say, "Wow, we didn't see that coming."
Yeah. So basically we will be seeing new cohorts of fintechs that are not, but I call them the AI natives because it's not, for now, the way I think of it, Spiros, and tell me if you agree, is we have digital natives,
Yes.
right, that are using AI tools, integrating them well, but they're not born AI native because AI native is not yet born. We are just integrating more advanced AI tools and gaining efficiencies. We don't have a new business model like the digital native business model yet.
Good point. Yes, I agree with you. I agree.
right? Because it's all somewhere in the organization, but the organization is not run in a different way. It's run in the same way. We're overlaying these and we're experimenting and seeing where, let's prioritize in our business what is the best area, where can we get the more bang for the buck, so to speak. It might be compliance, it might be marketing, it might be coding, depending on the business, right?
And and we should not forget for the audience, I mean, AI existed long
Yeah,
before generative AI, and it has been used machine learning also for, I mean, credit card fraud, etc., to see some patterns. And obviously you will see a lot of application. I mean, the potential of generative AI to read through business cases, not the numbers thing, and to bring out
yeah,
essence of the business case and evaluate if you want to give a loan or not a loan. I think there's a lot of potential out there. And just if we look at TikTok, for instance, not related to fintech, but
yeah,
all the big super wallets, they didn't start as fintechs. They started as a platform to attract people.
yeah.
And they did it so well. TikTok is so good with AI to know what we want, etc. Probably better than anyone, almost, I believe. So that it's easy for them eventually to also provide financial services because their customers want it, and they will come from a very different angle.
So do you see that it might not be a super app model, but this lifestyle, if you have the lifestyle attention, then you build with the wallet, tech stack, whatever you want. And anyway, financial services, at least to a certain extent, are just, auxiliary to whatever we want to attain, right?
Absolutely,
They're
absolutely.
not per se a goal,
It's a
right?
means.
It's a
It's a mean to something.
Yes, yes. Except maybe when we want wealth and advisory, maybe there is, but we're talking about 80% of what needs to be done for most of the population is there.
The nice thing, something that's still true, has been true when we started, is fintech democratizes the financial industry. Basically, it will happen even more so that people who in the past could not send money cheaply at the beginning from Paris to, I always call it, to Casablanca, to anywhere. They were able through TransferWise, etc., or Wise nowadays,
Yeah,
send money. And I think all those companies like Nubank, etc., democratizes financial industry. So it allows people, less privileged people,
yeah.
and medium privileged people to get more from their money, you know.
Yeah, but I think that we have to go beyond that because we have large parts of the population that are living under non-democratic regimes and under regimes that are not conducive to economic prosperity. And how do we help those? How does technology help those? These are arguments that we hear a lot with cryptocurrencies or stable coins or those that you and I in Switzerland really don't need them to live our life, right? But for others, they can save their lives. We have refugees, we have
Yes.
immigrants, we have all these socio-economic trends that we cannot ignore.
Look at India. India, for instance, in the old days, only boys were taken to the banks, by their fathers. So women were left behind in the old days. Through
Yeah,
digital banking, through digital possibilities, fintech, women were able to open accounts themselves, and it enabled them. And women are very good business women, and women are very good at building businesses. And just one example, how it empowered them. There was no one to take them because your computer took you to this bank account that you opened and then up and running. That's just one example,
yeah,
and
yeah,
that happens in Africa, and etc. So it's very empowering. I'm a strong believer. In my TEDx talk, which many moons ago, I think 2017, is empowering the less privileged people. I think that will be the legacy. If we look back, it's not making people rich or whatever. It's people who didn't have possibilities, like you said, immigrants, to open quickly bank accounts. If people don't realize, if you don't have a bank account, where will you get your money if you work, or where if you want to get to pay rent, etc. It's very powerful to enable people with not the same possibilities we have to have a minimum amount of financial freedom.
And that is why we all admire the super app model from China, right? Because it really did impact that bottom line of, a country with a very large population that was unbanked. And through the Alipays and the WeChats of the world, they really managed to reach to that point.
I mean, Alipay was a great example. At that time, a long time ago, they were so advanced, the Chinese fintechs. They knew if a merchant had money problems, just a liquidity thing, they came with a small loan to the owner of the shop and said, "Hey, I think you will need this kind of money, some amount, because we know you're gonna repay it, etc." But they had this advanced information, of what this merchant will be able to generate.
Amazing. Spiro, we could talk for hours, couldn't we?
We're passionate about it,
I want to wrap up our discussion and thank you.
Wonderful conversation we have. That's how it should be.